Hello and welcome to day 2. Today is going to be all about really setting the groundwork to becoming a trader. I'm not going to start just diving straight into charts and giving you charts and strategies straight away. What I want to do is set the groundwork to actually become a trader. The things that are going to stick with you all the way through your trading career. If you can get this part right, then everything else becomes a lot easier. So let's see how we're going to go and have a little go at doing that. First off, we're going to start by looking at a plan. A lot of people come into trading without a real plan. They just come in thinking, right, I want to be a trader. Let's learn what I need to do. Let's see if I can make a little bit of money. What you really need to continue the progression of your career though is an actual plan of where you want to get to, how you want to get there. So we're going to have a quick look through what you actually want to get out of trading. Now, this can vary massively and everyone does have a completely different view of how they want to be a trader, what they want to get out of it and where they see themselves in the future. Good friend of mine came into it essentially because he wanted to prove to himself that he could do it, that he could make money trading. He achieved that, he was very happy with what he achieved, and he left and he went and continued his life, and he lives a very happy life now doing something else, but ultimately he wanted to find out if he could do it. And so from there on, we need to build a career path. So your goals are going to give you your career path. For example, his goal was just to be able to do it. So that gave him his career path. It was about learning. It was about proving to himself he could make some money. So the goals that you have are going to develop your career path, and then set yourself individual goals going forward. We'll look into how we do that and breaking those goals down into more manageable ones and into a decent kind of sequence. Routine is exceptionally key to being a trader. It keeps you on a level, it keeps you prepared all the time, and so building up a realistic routine is very important. There's no point in diving straight in and having a very rigid, really strict routine that you just can't adhere to or is too expansive and just something you can't manage. So we'll try and create a realistic routine, and all these things are going to be able to develop as you go through the course, and you'll realize the time you want to give to certain elements of trading. And also we're going to have a quick look at preparation and at news sources that you want to be aware of and that you want to be watching in terms of getting the news in that is pertinent to the markets you're trading. So we'll do that. We'll also have a look at how I go around prepping my mornings, how I go about just prepping my whole day. So we'll look through that, and beyond then, we're then going to have a look at trader success. These are some of the things that I've noticed that is quite well written about as well, the things that are consistent in most good professional traders, successful traders. And this is firstly process. If you've got a process, you can repeat this, you can apply it to other areas of your trading. If you can have a very clear process, then you know where you're going to go with things. It makes moving forward a lot easier and moving into new areas a lot easier. Also, a good understanding of yourself is very important. This is something that takes quite a long time to develop. It's something that you are always developing an understanding of yourself. But good professional traders do have a very clear understanding of themselves, what frustrates them, what gets them going, when they realize that they're getting to a point of frustration, these kind of things, and that will help you massively. And also practice, ongoing practice, deliberate practice is very key. So we'll have a look at that, how you can develop a process for that as well. And finally, your trader development. I'm going to introduce you later to the trader development tool that we're going to use throughout the course, and also get you to sort of begin the trader development by setting your goals, thinking about what your goals are, and then we're going to try and break them down and build them into a bit more of a structure and something that you can actually follow on with. So that is going to be the end goal of this day. So what do you want from trading? Start thinking about this right now. It's going to be very important going through this course. And the reason that you have an idea of what you want from trading is it provides you with a focus, a motivation, gives you a way of creating objectives. Now, the focus and motivation is a great thing. If you've got a big end goal that you're trying to get to, if you go through tough periods of trading, everyone does, it's not always going to be rosy. Keeping that there, keeping that in your mind, having it very well fixed in your head of where you're trying to get to, stops your motivation really dropping when you get to those lulls in trading, those sticky times, those times where you need to start revisiting strategies, reworking things. You can do that. You can start reworking things if you've got a clear goal to be aiming for. Otherwise, looking at that idea of redoing something, of building a new strategy, all of a sudden just looks like a mountain and you don't want to do it. So keep those goals there, get them fixed, and also get them more and more clear all the time. Just start thinking about these goals, make them more clear so you can actually visualize it. If you can see that goal, if you can see yourself in that place, then it just makes it a lot easier to draw motivation from it and to push on towards it. Now, what we're going to do is you've got to break these goals down into various different elements. I've always tried to break them down into three. Firstly, into financial goals, so you can actually achieve these in a very quantifiable way. You know, I aim to make X this year. Did I do it? So you can have your financial goals. You can then have performance goals. Performance goals are a little bit less quantifiable, but they do give you an aim of where you want to get to, and this is what's going to drive you forward, push you out of your comfort zone. Having a financial goal won't necessarily push you out of your comfort zone. You could end up hitting a piece of luck. You could have a very fortuitous incident in your trading, and that could push you straight towards your financial goal, but it doesn't push you out of your comfort zone. The performance goals are what's going to do that, and that's what's going to drive you to sort of step outside and accept that sort of fear. It's a very important thing, accepting a little bit of fear when you're trading. And then also personal goals. There's no point, whilst trading can be very time consuming, and it does fill your mind a lot. You know, you're often thinking about trading, thinking about how the economy's going, etc., even when you're out of work. Of course, it needs to be an interest and a passion of yours. However, you do need to have some personal goals as well to maintain a good life balance, and that also contributes to your happiness. If you're not happy in other elements of your life, it's very hard to just maintain a happiness just from trading. So, as I say, break them all down, and this is going to make your progression a lot more manageable, and it is going to allow for your goals to be created a lot more easily and also stuck to a lot more easily. So just a few examples. Financial goals. Do you just want an income? Do you want to be a millionaire? Do you want to run a hedge fund? All of these things are entirely viable options, and it does vary by person to person. And of course, as I said in the very early slides in the first day, these can change. When I first came into trading, I sat down as a new grad and I thought, you know what, one day, I've read Market Wizards, I've read things about George Soros and various other people in the past, I'm going to own a hedge fund. And eventually, as trading went on, I realised that actually it was the trading that I enjoyed. It wasn't the logistics of actually owning a large fund. So that goal changed. But the fact is, I did see that as my goal to start with. That's what motivated me to learn how to trade, to learn how to become better, to learn how to push myself. So there's nothing wrong with having whatever goal it is, and no matter how big that goal is, that is absolutely fine. Just keep the goals. Just maintain the ideas of where you want to be getting to. Performance goals. These are going to be more things relating to how you actually trade. Things like how much size you are actually putting on trades. Do you want to increase your size? That's going to be, a very legitimate performance goal. What markets do you want to trade? Do you want to start building out into different markets? Are you going to look more at consistency? Is your performance goal going to be to have 80% of your days that you finish up on the day? Things like that. So just keep thinking all these things through and decide what goals are really mattering to you, and also your various strategies as well. Performance goals in terms of how many strategies might you want to build up in a year, and of course your personal goals. Are you trading to allow yourself some freedom, to be your own boss, to Give yourself holidays whenever you want, to give yourself flexibility. And also, are you enjoying trading? Yeah, this is a very clear personal goal. It doesn't necessarily have to be a goal. I know people who don't necessarily enjoy trading that much, but it's a very viable business for them. It's a very viable income. So whilst they may not love it, it pays the bills. They can manage their time down to doing reasonably limited hours while still making a good income. And then that gives them the personal goals of actually having a lot more time to themselves, time with family, and freedom outside of work. So think about those elements of it as well. All right, so you've had to think about your goals. I'm guessing, to start with at least, a lot of these goals are quite big picture goals, things that you really want to achieve, places you really see yourself, and that's good. What this will do is create your 5-year goal. Your 5-year goal is a very strong picture of where you see yourself in 5 years' time. And the reason for this goal is to provide an anchoring. So this goal does need to be all-inclusive. It's got to include what you want to achieve, what markets you might want to trade, where you actually see yourself in life as well, not just in terms of trading. You can break the goal down a little bit into specifics of trading if you want, but ultimately it is a big picture goal. And this is the goal that maintains your focus, maintains your motivation, maintains that drive to keep on going. So that's going to be there. Keep it in some way, write it all down, have it written down what you want that goal to be, and periodically come back to it as well. Use it to remind yourself. Beginning of each month perhaps, read that goal, and that will just set you up in the right frame of mind for the month. So moving on from there, year 1. This is the first time that you can actually start setting yourself specific goals, ways that you're actually going to achieve that big goal in year 5. Now, there's no point in looking at year 2, 3, 4, because until you finish year 1, you're not going to know what you need to achieve in those years to continue yourself along up those steps really towards goal at year 5. So year 1 is where you can make it more measurable, give yourself very clear targets, but be realistic in this target giving. What I really mean by that is, don't make them proportional to year 5. If I'm just going to use a very simple example here, if your aim by year 5 is to have $1 million in the bank, don't give yourself a target in year 1 of making 200 grand. It's unrealistic. Yes, it is entirely proportional with what you aim to earn in year 5, but it isn't proportional with how a trading career progresses. What you'll see is at the beginning of a trading career, earnings move up quite slowly, and then will take up a big slope going forward. Reason for this is, as you increase your size, you increase your earnings ability. So it shouldn't be proportional. So give yourself something a little bit more realistic. First year goal maybe just to cover your costs, to give yourself a simple income, something that you can just about live off. That's your first year. That's whilst you're learning. So make sure your goals are clear there. Make them realistic, but also make them quantifiable. A goal of consistency is a good one as well. Can you get 10 months out of 12 where you finished up on the month? Moving on from there, month 1. This is where you can actually, once again, bring those goals down a little bit more. Month 1, like I say, if you're aiming for 10 months out of 12 to be up on trading, month 1, first aim, cover your costs. Get yourself a P&L that's going to build yourself to be up on the month. Subsequent months then, it may be a case of you want to develop a new strategy. It only has to be one. Make it realistic. If you develop one new strategy each month, it's 12 a year. You're going to have a lot of opportunities to trade then, just by the end of year 1. Even by the end of 6 months, you'll have quite a lot to be doing. So give those your aim for the month. Each ongoing month, maybe it is also an aim to increase your size. Make this proportional to your trading, but also think about the way you've actually been trading as well. If you've had a tough run because your strategies are not working so well, perhaps adjust the goals each month. Next month maybe not increase the size, but improve a strategy. So these will change each month, but again, make them quantifiable, make them entirely focused so that you know exactly what you aim for at the end of the month, and you can come back and reassess it. And finally, week by week, this is going to be the actual implementation type goals. Did I follow every strategy that I had? Why didn't I? Was this something to do with something going on in my head? Was it to do with news? Can you reason through why you didn't do certain things, why you did do certain things? And that's where you can build up each week there. So weekly goals, make them very tight on actually performance-based things as opposed to just purely on a P&L thing. Make them performance-based, and that will start your week off right. Start you thinking in terms of, right, I'm going to hit every trade that I see, every trade that sets up, that meets the criteria of that trade. Now, the reason we break these down is to give you something a little bit more manageable and allow you to achieve something each day, each week, even each hour. What I do think is very, very important, and this is quite commonplace in a lot of literature around goal creation as well. Write them down and create some accountability. Give them to people. Now, this doesn't mean in terms of raising people's expectations of what you're going to achieve. Don't tell them your 5-year goal. That's not necessary. But explain to them what you intend on achieving in the first year. This makes you accountable. You don't then have to go back to them and explain to people why you did or didn't achieve certain things. But what it does is it fixes in your mind that you have told someone you now need to keep working at it. Write them down. I know people who have got big pieces of paper stuck in their bathroom, and so that every morning when they get out the shower, there is something stuck on the wall that tells you what your goal is for the rest of the month, what your goal is for the rest of the year. Big picture goals. I've done it on the back of my bedroom door, so before you open it every morning, I've got certain cards that are written out with what I intend on achieving by the end of the year. So every day I keep that focus there. So do write them down. Find a way that suits you. Put them in the place that you're going to look at every day. Is that in your box where you keep your watch? So you open it up in the morning, you see what the goal is before you head off to work. Periodically reassess these. Like I said at the beginning, I wanted to run a hedge fund when I first started trading. As I went on with trading, as I continued, I started to think about, well, was this realistic? Did it really fit with my life? I didn't think it was necessarily too ambitious, but what I did discover was it didn't actually fit with what I wanted to do. And I decided that wasn't where I was going to go. My focus was then going to be on actual trading, and then eventually moving into being able to try and coach people, try and teach people how to trade as well. Could I develop those kind of skills? And so that again is still an ongoing process for myself. I will, after each course, reassess how well I've done at that, and then try and build forward, set myself a new goal for next year as well as my trading goals. So that's your career path. Make sure you get that 5-year very clearly fixed, and then just build each week to the month, each month to the year, and then each year reassess at the end of the year, decide what you need to do for the following year, and go back and start again, and keep just tick them off each week. It'll give you a great sense of achievement, and then it won't allow you to start feeling that you've not achieved everything you want. Next up is routine. Having a well-defined routine is a fantastic thing for being a trader. It provides you with so many benefits. To start with, it provides you with a level of consistency. Consistency is the name of the game in trading. If you can be consistent in your routine, then this just feeds through into consistency in how you trade, consistency in how you take trades. And so it's just a case of just building on these kind of things. It reduces a lot of self-doubt, self-questioning. I know this sounds quite silly, but even little things down to what you're going to wear in the morning. Some days you wake up and you think through things way too much. It reduces all of that kind of nonsense, overthinking things, and it focuses your mind a lot clearer. You have your routine, you know what you're going to wear. I know it does sound very simple, but this is something that Einstein did. He always wore the same thing, which incidentally is why Homer Simpson wears a white shirt and blue trousers. Apparently that's what Einstein used to wear, but he always wore the same. Reason being, it reduce the need to overcomplicate things and to overthink things and create self-doubt in that way. It reinforces positive habits. If you are routinely doing something that even simple, but it gives you a good sense of achievement, then it just reinforces that. It starts your day off right. And enforcing positive habits is always a good thing. It makes you feel better. It makes you feel like you've achieved something just at the beginning of the day. So it's great for that. Of course, the big thing is it prevents missing important news. I've done this in the past. I've missed things because for a while I didn't have a routine. It was very much drilled into us when we first started trading that you needed a routine, you needed to be in the office at a certain time, you stayed until a certain time. But what happened is, as I began to succeed, I felt that, well, I didn't need to do that, and I started not bothering with certain times of the day and not having a very strict routine. If I didn't fancy going in some days, I just didn't, or I'd go in later. And what I found is that I was often missing important news. I was coming into work unprepared, and all this because I dropped my routine, because I felt that, well, I didn't need it anymore because I'd achieved, or I was beginning to achieve, I was successful, I was making a decent amount of money, and so you just gave up on routine. And this was very detrimental, and it took me a while to actually think back and think, right, I need to build a routine once again and stick with it and reinforce those habits that I had when I first started, that I built up without even realizing. I had habits of what time I got up, how I got to work, what I did prep wise, an order of preparation that I had each day, and these were built up over time. They're very easy to be lost, they're quite hard to build up. So get that routine down. It prevents you missing important news. It manages your time for you as well. It manages your energy. Routines can be adjusted in certain times when it becomes a little bit quieter. Trade smart, don't just work hard. There's no point in sitting at your desk 12, 14 hours a day when it is not busy. And so it manages your energy in those ways. It gives you the time to sort of break away, but do it in a structured way. When the markets become busy again, then you will have to work some longer hours. But again, factor that into your routine, and all of a sudden it doesn't seem like such a chore coming into working 12 hours a day if your routine is quite clear on how you're going to do that and how you're going to manage your time and your energy outside of that. It increases your confidence. I know this sounds a little bit silly in a sense, but what it does is, because you are seeing the positive effects of your routine, because you're seeing that you're consistently doing things right, you're consistently getting your preparation right, and this makes your trades work out that little bit better. It increases your confidence in all of your trading. And like I said before, it just gives you a small win at the beginning of the day. I'll give you an example. I cycle to work every day. I have a time that I'm going to leave my house and get to work by. So it gives me a little bit of a goal. I aim to beat that every day. It's not a massively challenging time to beat, but I do have to work at it to beat it. So that small little win every day that I know I can win, but it just sets you up just right, gets you in the right attitude just before you get to work. So factor something like that into a routine of yours as well. Here's a brief overview of my routine, how I go about my day. So start off with, wake up around about 6 o'clock, cycle to work, breakfast at work. This is reasonably consistent every day. It takes me half an hour to do it, to get from my bed onto my bike, showered, breakfast, at my desk. Then I'll spend the next 25 minutes prepping. What I'll do is, first things first, we want to go through the news. The overnight news is key. That's going to give you an idea of where the markets are going to open, and then I'll be planning any strategies that I will trade straight off on the open based on where the open's going to be and what the news has been. So start with first half hour after 7 o'clock. This is the pre-cash open, so just the futures markets are open. Any strategies that I have for that specific time of the day, get those traded, and then from 7:30 move on to full-on technical preparation in terms of levels. The first half an hour of trading, that first futures open period is going to just give you that little bit more information, which is why I don't build up a huge, big technical picture straight off. Really, it is down to where the market closed previous day. And I'll show you how I go about this prep in a moment. Like I said, I always do it on a piece of paper. If you want to make it a bit more structured, do it on an Excel spreadsheet. It is down to what kind of, suits you best. I like the piece of paper. I can have it in front of me. I can jot any notes down throughout the day, that things that have changed, things that I've seen. So once I've gone through all my technical levels, decided on areas that I'm interested in, I'll also have a little write down of trades that I specifically want to do throughout the day. It's then a case of bell goes at 8, I'll be ready for that. I'll spend the last 5 minutes between 7:55 and 8 just getting myself in the right mindset, get myself ready, prepped and ready to go. Trading starts at 8. I will then trade to about 10:30. Whatever strategies set up for the day, execute them. And then from 10:30 till 12, this is usually where the markets die down, and this is where your routine can have an element of flexibility in it. It's not going to take you an hour and a half to reassess every trade that you've done in that first 2.5 hours of trading, but what you want is a bit of time in that hour and a half to actually think about how your trading's gone. Have you done certain things right? Have you done certain things wrong? Also, what have you learned from those first few trades of the day? What has the market done that's perhaps told you what's been going on? So just get those things down. That's part of your 10:30 to 12 o'clock analysis. Then give myself a little bit of time away from the screens. Have your lunch, take a break, take a step back from trading. It refreshes your mind, it gets you back to being on a completely level field. This is what I personally find helps. Just taking that little step back gives you just a little bit of time away. If you like to go to the gym, get a bit of stress out, energize in that way, then build in a little bit of time to do that. Then you've got the US numbers at 1:30, trade those, and it's just afternoon trading from then on. So you've got your strategies that you're going to have thought about when you come back from lunch. Afternoon trading, 4:45, that's where I sit down, debrief myself, and we'll have a look at specifically how I go about doing that later on in the course. Debriefs, look through all the trades, monitor my P&Ls, monitor my performance as well. It's not just all about the P&L, and monitor how trades have adjusted. Do I need to start thinking about these strategies? And this is how you can start considering building a new strategy, say for month 1. And then finally, 5:30, head home. That's my own time for myself. Do whatever I decide I want to do. That's where you give yourself a bit of free time. 9:30, I always check the closes before I go to bed, just so that I'm sort of semi-ready for the morning. You don't know what's going to happen overnight, of course, but it's good to sort of have an idea of what's happened in that run-up from when you left through the rest of the US session until the close. So that's how I go about my routine. I'm not saying you have to start the day at the same time, finish the day at the same time. It may not be the way you want to trade, but have a clear routine. Make it precise. Give yourself some flexibility in the middle areas, but the precise areas, the things like what time you wake up, make that consistent, because that's what builds in that consistency, that habitual nature. And like I said, I gave the example of cycling earlier, so make them precise and then stick to it, of course. And that's what will make you feel like you've achieved something as well, just by sticking to your routine. Here's how I go about my morning preparation. First things first, I will go through the news from overnight. Any major news that has come out goes bang straight at the top of the page. Something that is going to be very relevant to how the market's going to open and directly impact what happens at the open. Give an example of this: China currency devaluation. That will go bang at the top of the page, and it is just something that I'm going to be very aware of straight off. Now, barring any news coming out, I'm then going to go through my charts and have a look at exactly what's been going on recently and things that I need to know. So do this in quite a methodical way. I trade the DAX, I trade the Bund and the S&P. I will be aware of what other markets are doing, but in terms of actually going through in detail every market, these are the markets that I'm going to focus on. So what do I look for first? First things first, where did the market close? How did it close in relation to the way the day traded, and how has it closed in relation to recent closes as well? Then going to look at where value has moved to, and this is going to give me an opinion of how strong the market feels about the direction that it's moving in. We're then going to look at the open. Now, the open is quite important, and in the equity markets is derived from what the S&P has done. So the S&P futures stay open all night, European markets don't. So say the S&P closed at 22.05 and is now trading at 21.95. This is going to give me a clue of where the DAX is going to open, or certainly a reasonable area. We'll also look at the estimates that the brokers give out as well. So you're going to get a reasonable idea of where you think the market's going to open. From that, you can then start thinking about what you're going to do if it does open there, or if it opens above where you expect or below. There may well be a trade on there, and so that is something that you're going to think about first. What is your first trade, if any, of the day at the open? So that's what we're going to look at to start with. From then on, I'm then going to look at my expectations for the day. What do I think the market is going to do by the end of the day? How is it going to trade? Is it likely to spend a bit of time in certain areas? Is it likely to trend? Have a little bit of a think about that. So you build some expectations. Now, whilst this will guide you, it's not something you need to be married to. So the next thing is, once I've got those expectations of what I think is going to happen, I then need to build up a bit of an idea of, if something happens, then something else will happen. What is going to have to change for me to change my expectations of the day? Have we got to get past a certain level? Have I got to see something going on in the market that makes me change what I think is going to happen for the day? So that's the next thing. I will give myself what I call a line in the sand. Now, a line in the sand is, say, for example, I think that the Bund is going to go up for the day. There will be a point that I think, right, if it drops below here, it is not going to continue up for the day. And so that is my line in the sand. Essentially, any trade above this area, or above this area in particular, in these areas, is an opportunity where I should be looking for the chance to buy as a longer term trade for the rest of the day, or it builds into the expectation of the day. If we start getting through here, then that's making me now think that what I originally thought the day may pan out to be like is wrong. I need to start then adapting the expectations, and this is where that if comes from. If we do get below here, what am I going to do then? How am I going to change my mind? And what are the trades that I'll be looking at from there? So once I've done that, I am then going to move on to key levels that I've got. There'll be a few key levels that you think are very relevant, that perhaps not necessarily that you have to trade if it gets there, but anything that is very, very key. So this could be the 200-day moving average. If we're anywhere near it, if we're within distance of touching it, if it's not been touched for a while, various reasons, for whatever reason it is, I'll note down certain levels. You know, in the Bund, it could be a recent swing low. That if we drop through it, then perhaps that is the example where I now start thinking that the Bund is not going to continue higher because we're through that area. So any very key levels that I see as relevant, I will have them marked down, and it will help inform my decisions. What I then have is, down in the corner, I will have trades. There are certain trades that I will want to do irrespective of what happens throughout the day. So I will have certain levels that I will say, for example, we'll have buy DAX at 200 MA. Something along those lines. Sell S&P at a fib level. whatever these trades are, I will have them written down. I will know exactly where they are. And so what it means is that I'm not missing out on them. And as the day goes through, I will tick them off. Some trades won't even get there. That doesn't matter. But I always have those trades in my mind at the bottom of my piece of paper. I always do this on paper. It is just how I've always done it. I find it easier to have a piece of paper in front of me than have something written down on a spreadsheet. But that is entirely a personal preference. So that's how I'll do the element of setting up trades. There will also be another case of just noting down any key things that are coming out throughout the day. Perhaps it's a speaker, perhaps there's a press conference that wouldn't necessarily always be in the normal daily schedule, and any new information that comes out on things that are going to be there. So perhaps this speaker is going to be at 11 o'clock, and we've also got a press conference at 2:30. This will all be noted down, so I know exactly when I need to be thinking about things, exactly when I need to be focusing on certain markers. And so as these numbers come up, again, we'll just tick them off and they're done. So just don't give yourself the opportunity to forget things, to end up going out for lunch and you end up missing out on what could be very market moving news. It doesn't necessarily mean build a big expectation for what's going on in this conference, but what it does is it just alerts you to be ready and to be thinking. Now, in the S&P, again, come the afternoon, I will then follow the same ideas that I've done in the Bund and in the DAX. Have a more thorough look through the levels that are relevant in the S&P and plan my trades for the afternoon. In that same time, I will then also go back and start just having a look, write down a few more points, a few more levels that I think are relevant in the Bunds and in the DAX for the rest of the afternoon session. Reevaluate what happened. Did your expectations get met? Are you still looking at the same things? So constantly reevaluate, just note everything down. At the end of each day, I do also usually write a small note. I'll write my P&L down, X, 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 and I might note something down just briefly before I go into my debrief on just any major thing that happened or something that I should take away from the day. So say we get a gap, I'll note down gap and drop. Something like that, just to give me a reminder so that when I look back through my sheets, I can look very quickly and start thinking to myself, yep, that was something that was quite important, something that perhaps I've not seen before, and that will get me to look back through my debrief and reassess what has been going on. So that is how I prep myself for the day and also how I keep things ongoing. When it comes to the news sources that you're going to use, there's quite a few to choose from, each with different advantages, disadvantages. First up, we'll have a look at an actual terminal that you would have on your desk. We use Zenith at Axia. What this does is it provides you with customizable news, customizable charts, so you can pick out exactly the information that you want to be getting. It also gives you the embargoed news releases, so economic data releases that are coming out, you will get them immediately as they hit the wires. So this is the fastest source of news that you can get, and you do get exactly what you want from it. It is also the most expensive, and that is what you're paying for. Being an Axia student, we can offer you a 3-month free trial. This does require the purchase of 1 month subscription to start with. Click on the link and that will take you through to it. If you've got any questions, do get in touch, info@axiafutures.com. What the offer is, or the options that you have with Zenith, is you can have the foreign exchange data. This is $99 a month. You can also then have a regional package. This gives you news as well as charts from one of 4 different regions. So that's either Europe, the Americas, Middle East and Africa, or the Asia Pacific. So they're $150 per month. There will be a data exchange fee applied to any live data that you're receiving as well. So it can be quite costly, but if it provides you a piece of information before anyone else in the market gets it, or as fast as anyone else, this can be the difference. And this can really, it can pay for itself in a month. I've seen it done many, many times. So that's probably your most professional, most up-to-date in terms of pace or speed of the news that you're going to receive. Now, looking at other areas you can get your news from, Twitter in the last few years has become vital to traders. Everyone from Donald Trump to Warren Buffett to absolutely anyone you want to learn from is on Twitter. Big pieces of news have come out on Twitter as well before they've actually hit the main news wires. So keep watching Twitter. You'll be able to learn a lot from it, but do be aware. There's a lot of things on Twitter that are just not true. So spend a bit of time, actually follow some people, spend a bit of time watching them and see if they are consistent, if they are credible. Obviously, follow the news wires as well on Twitter, but this has become a vital resource. All of us watch Twitter regularly, so keep that up as well. It is the next best thing to having a subscriber-based terminal that you can get. So do watch that, and of course, if you are on Twitter, follow us at Axia Futures. Now, you've got the financial press. This is great for fundamental analysis, for creating a better, broader knowledge, and something I would recommend. I make a concerted effort to read at least 2 or 3 articles every single day from one of the various sources, be it the FT, Bloomberg News, CNBC. Any of those sources are worth a read. They'll give you different views, but it'll give you something to think about. Something to remember though, it is always backward looking, so you're never going to get anything up to date from them, and it is more a learning source. Next up, you've got a Squawk service. What a Squawk service is it's a subscriber service where you will get commentary, up-to-date commentary on what's going on in the market. The Squawk will have access to some of the main terminals as well, so they will be able to squawk, so shout out the numbers, new information very, very quickly. So this is certainly an option and something worth looking at. They will also provide insight as well and information throughout the day through emails and just general information throughout the day. We use Broker Talk. I've used various different Squawk services. Broker Talk is by far and away the best. Their analysis on all sorts, particularly the bond markets, is second to none. They're always up to date with their information, and that is who we use at Axia. This, I think you will find, is an invaluable resource. So get in touch with us, info@Axia Futures. We'll be able to point you in the right direction if you wish to set this up, and I would highly recommend it, at least for the beginning of your course, and I think you'll learn just how important it can be. As I said earlier, a lot of successful traders exhibit some very common traits. In this section, we're going to have a little look through some of the more common ones, but also the ones that I think are the most important. Now, what you will notice in this section is I will speak very little about P&L. Reason being for this is that P&L shouldn't necessarily be the thing that drives your trading. It should be more about the process, about the way you go about doing things. And I think this is summed up very well by Warren Buffett, who said in the past that we enjoy the process far more than the proceeds. And what this does is it means that your P&L is more a byproduct of the way you do things. It's more a scorecard of how you're doing, rather than actually a way of deriving enjoyment or measuring every element of your career. So it makes things a lot easier as well to manage. You can enjoy the building of a new strategy, the research that goes into it, the sort of mental challenges that you'll put yourself through, as opposed to deriving your enjoyment from just judging yourself on whether you're up on the day, whether you were down on the day. Everyone has up days, down days, and sometimes this can be entirely based on luck. It can be based on the fact that your strategies haven't worked. But if you derive enjoyment from adapting those strategies when they haven't worked, then that's a lot easier to take than hoping that the next day is a positive day to eradicate the previous losing day that has, dampened your mood and prevented your enjoyment of trading. So to start with, as Warren Buffett says, process. This is why even the smallest goals are very important. If you can just tick off little goals, make this part of your process, then it just makes everything feel like you're flowing along a little bit easier, makes you enjoy things a lot more. So for me, there's 4 elements of process. I'm going to relate this example to an actual trade. So first element is preparation. This is where you're going to be looking at the market and you're going to be thinking, has the market done certain things that meet the criteria for me to execute a trade here? That's your preparation. You've done the preparation in developing the idea, but now you're going through, has the market met the criteria? Are you comfortable with the risk that you're about to take? If so, you can then move on. Execution. Your execution, because you have gone through the process of building the strategy, your execution is quite well defined. You're going to know that you have a certain area to buy within, and you're going to wait for it to get there. You're going to wait for that criteria to be met. And what this does is it stops hesitation. You've got a process. You know what you're going to do when it gets to those prices. It stops a hesitation when it gets there, a sudden looking at different elements, a sudden questioning whether you're right or wrong to be doing the trade. What it also does is stops an eagerness of getting in too early. Say you want to buy the market at 10s and the market comes down to 12s, 13s. You might suddenly think, just buy 12s. Why not? I want to be in on the trade. If you're sticking to your process, you'll wait. You'll wait until it gets to 10s. That meets your criteria. That is where you wanted to be getting in. You'll get in there. So it stops that jumping in early and then creating a larger risk because you've now bought it a little bit higher, and so you've got to take a little bit of a bigger risk on it. So that's what the process will help you do. Execute your trades at the right price, at the right place, have your stops positioned in the right place as well. Beyond that, you then want to evaluate. You're going to look back at the trade. What went well? What went wrong in the trade? How could it be improved in any way? And so you're going to go through each element of the trade, not just whether it met the criteria and whether the trade was a winner or a loser. So again, this then suddenly relates back to your P&L. You're judging it purely on whether it made you money or not. You want to be looking at it in terms of, did it hit the targets that your trade gives you? Did you execute it? Did you have it right in your mind? Did you get out too early because all of a sudden you stepped away from the process and you started thinking about, what if the trade goes wrong? Do I need to bank some money on this trade rather than just following the trade through? So evaluate it in that way. From your evaluation, you can then look at improvements. This is where you start honing the ideas of the trade. Perhaps you need to develop the trade in terms of, if you're finding that very often in the example that I used, that you're not getting filled at 10s when you want to buy them, then maybe you do need to buy 12s, but buy them in a smaller size. So keep the same risk, but you buy 12s, 10s and 8s, for example. Smaller risk at each, but what it does is it means that you are getting filled, you are getting in on the trade. So that's where you get the element of improvement. What this process does is it means that you can look at every trade individually. You don't start looking at the trades as something that encompasses your whole day, that because you've had a tough morning, for example, you're not going to take a trade. If the trade matches your criteria, follow the process. And by following the process, it will take away that element of concentration on your P&L and concentration on exactly your enjoyment of the trade as well. So enjoy the process. It makes the whole trading element a lot easier. So you've got your process, you've got your routine, you know exactly how you're going to go about things, how you're going to do the trades, how you're going to set up your preparation, how you're going to develop new strategies. However, for some reason, no matter how well planned this routine is, how well focused your process is, you just can't do it. And often this comes down to actually more of an understanding of yourself and the things that are going on in your mind that are perhaps stopping you from executing trades, executing a strategy in a certain way. And basically it does come down to the better that you understand yourself, the better you understand what frustrates you, what's winding you up, why are you not doing the certain things that you intend on doing, the better your ability to sort of step back from the emotions. Now, you can't eradicate your emotions, you can't eradicate what comes into your head. What you can do though is realize it and take yourself away from it a little bit, or just realize it and just put it to the side, and that's way you can then continue with your process. I'll give you an example, something that I often find myself doing. If I've had a couple of tough trades that have not gone my way, even if I have executed them exactly how I wish to, what I'll often find myself doing then is distracting myself so that I end up missing trades, because it's an escape feature, if you will, that what you'll do is you try and take myself away from certain trades. And so I'll end up sitting there reading absolute rubbish on the internet, looking up football results, things like that, that have no bearing or relevance to trading, but what it does is it takes me away from what I'm doing. It's at this point when I realise that I am doing that, that's where I sort of take a step back and think to myself, right, you now got to start looking for a new trade. So first thing I do, as soon as I start feeling like that, as soon as I realise I'm distracting myself, I will sit down, I will go through my charts and I will write down what's my next trade, where is the next trade for me. And what this does is it sets me back into a trading mindset and gets me continuing on with my day of actual trading rather than just wasting my time. So it is about understanding yourself. It's also that element of, you know, do you start getting very annoyed as trades go offside? Again, if that is the case, then that's a time where you've got to step back to your process and allow yourself to just get that back into your mind, that you know where your stop is, and until it gets there, there is no reason to be frustrated. If it hits your stop, well, that was entirely planned as well. That was part of the trade. And like I just said, that your emotions they're not going to go away, and in a main basic sense, they are entirely physiological. Ultimately, when you come into a situation of danger, putting a trade on, there is a danger that you could lose money. Your body builds up adrenaline. Reason for this, it's a fight or flight mechanism. Unfortunately, in trading, in modern life, you don't actually need to run away or to fight many dangers anymore. You know, there's nothing physical you can do when you're trading to get rid of this adrenaline. And it's very useful in the terms that it gets you very focused. However, what it doesn't do is allow you to take in all the other elements of information that are coming your way, and you just become focused on one thing, and that often is the danger rather than the whole trade. So as long as you can understand that, then that's going to help you along the way. Understand that your body is just pumping with adrenaline, and that is why you end up getting overly focused and either panic and run away, and so don't put the trade on, or end up jumping into trades too early or jumping out as you try and fight with it. So just be aware of that. Find your own ways to deal with this. Sometimes it could be a case, put your trade on, put the stop in, walk out the room for a moment, just let the trade just breathe for a minute, let it, let yourself balance back out, let the trade balance itself a little bit, and then come back. It could be, use up that physical energy, get one of these, squeeze it. I see a lot of people with that, and that gets you through it a little bit. So just be aware of these things, and that is, again, that understanding of yourself. Now, I'm not going to read through everything, but I have got a little chart here, basically just giving you an illustration of how stress can develop and how it can be very useful in terms of getting you focused, but it can also then have very detrimental effects. This is something that's very difficult in trading, in the sense that you have to go from being quite inactive. If a trade comes along that you want to do, then all of a sudden you have to become focused, become ready, but again, not let that go too far. So another thing that I do is I keep a note, and this is how you can begin to manage your emotions, manage how you feel, and begin to understand yourself a little bit more. As I go into a trade, once I've done the trade, I should say, I will then go back and relive it in my head and think about exactly how I felt through each element of the trade. Note it down, and if you start noticing common traits, then that's where you can start picking up on, were those trades working out when you had those feelings? If so, or if not, then you need to start recognizing them and find a way to step back. Like I say, my trait of distracting myself if I've had a little bit of a bad run, rather than continuing to trade and get the money back, I notice that, and then I have a mechanism to get me out of it, and that is write down my next trade, get ready for it. So that's the kind of thing that you need to build up, and just understand what it is that's getting at you. I've got here an example of just how this stress can spiral, and how understanding yourself will help you step back from it a little bit and step back to your process. It is something that you do very often see. This, as you can see there, trending market is clearly moving higher, and so what you're thinking is, right, I need to get long, I need to try and find a place to buy this market. So what happens is, you've got a level, you can see where you want to get into the trade, and your entry's not reached, you miss out, you don't get on the trade, and the market continues higher without you. This starts to build your frustration, because you're thinking, well, I could have had a bit of money here, I should be making some money. However, it didn't meet the criteria of your trade, and this is where, again, having a very clear process gives you that chance to step back. But equally, if you don't understand what's going through your head, then you'll start doing other things. And what is very common is, all of a sudden, you see the market get back to its previous high, and rather than accept the fact that it's an uptrending market, you're now focusing on the fact that you didn't make any money on this up move, so you end up selling the previous high. The market does do what originally you thought it was going to do and continue higher. You then take a loss, which is the second arrow. Take a little bit of a loss. You're now thinking, wow, I should be up some money. You give yourself a idea of how much money you should have had, and actually you're now down for it. So this is now building the stress. This is really building it up, and you're getting very frustrated. Like I said in my previous example, this is where often I will become frustrated and then start doing something else, just try and take myself away from trading completely so that I escape that frustration. It's not always the most helpful thing to do, because what you then do is you miss out. And so what then happens is your frustration spirals even more, because you've distracted yourself, you've got so frustrated with what's been going on that actually you missed the good trade, the pullback to that previous high, your opportunity to get in, and that's where you would have made all your money. And this is what really gets people going, that it's often this missing outside, and the telling yourself you should have had something that you shouldn't have had. If the trade isn't met, if the criteria isn't met for your trade, then there's not a trade, and there's nothing wrong with that. And you just have to remind yourself of that on a very regular basis, in fact, and sit back, sit yourself down and say, right, where's my next trade? What's the next thing that I'm going to do? And that takes away that little bit of stress for you. So just understanding when it is that you're building this up will help you a great deal to sort of step back, just draw back to your process. And that's one of the key things. If you've got that, then you can always just step back from that. It takes all of the emotion away from it. So just keep that in mind, the way that just that very example there, you will see this happen. It will happen to you at some point. It does happen to everyone. But the quicker and the more you can understand how that starts to make you feel, the more and more that you can recognize it when it's happening and then eradicate it and hopefully continue on making money for the rest of the day. Okay, practice. This is one of those frustrating areas that no one likes continuing doing practice, but getting your practice done is what really helps you improve. And yes, it can seem like a chore, and yes, it's not always the most enjoyable to continually go over and over something. However, this is where you build, and you can't immediately change anything. You can't just suddenly decide, right, tomorrow I'm going to do things differently. You've got to continually practice. You've got to build up that sort of thought trigger in your mind, that how you spot a pattern, how you recognize something in the way a market's trading. And this just comes with time, with practice, but deliberate practice. There's no point in just repeating something. I'll give you an example. You need to gain some feedback as well, but I play quite a lot of snooker and pool. Now, I could practice for hours by just going to the pool hall, smashing the balls around a bit, pot a load of balls, and go home thinking, yeah, I'm pretty good at potting balls. What you don't gain from that is any kind of feedback of, are there certain shots that you're better at executing? Are you lacking in certain areas? Gain that feedback, pull those shots out of it, and then you can practice those. Repeat those from a variety of different angles, a variety of different ways of going about the shot. And that's where you're going to get the improvement. So you want that direct feedback. And then you can apply this to trading as well. Not all deliberate practice in trading is just going to be about doing another trade, keep doing trades over and over. It can be a visual thing. Say, for example, you want to go and practice an inside day break. You know what the trade is. You've gone through your process. You've looked at the patterns in the past. You think you can put an appropriate stop. You have a target. What you can do though is then go back, replay them, and visually look at where you would have actually executed the trade. Is there anything pattern wise in the way the market actually trades as it's breaking out, as you get onto that breakout trade? That's where you can get a bit of feedback there, and then you can start replicating it. You can start seeing that every time you get to, say, a new high, if you're playing a breakout trade, that you start seeing a certain type of buying coming into the market, and then you can start replicating that. You start spotting that pattern again and again and again. And not only is this improving your trading, it is also practicing your ability to spot patterns as well, which is something that's going to be very, very key. So going back, doing things like that, replaying ladders, practicing your routines as well throughout the day, practicing how you digest news, how quickly you can pull out the elements of it that you need. That's all going to be very key to your practice. And then, of course, design ways to improve it. And this is like I was saying about the pull shots. Design ways, put the balls in positions that are going to be more difficult for you, and then keep going over that. But design it so that you can take them from a variety of different angles, because ultimately, whilst the objective is the same, to pop the ball, the way you go about it is never going to be exactly the same in every situation. So you've got to be, again, going back to the watching the ladders, watch it, visualize how you would do it. And again, you can then add more things to this. You can add, in a sense, of where you would pyramid the trade, where you would add to the trade as well. And then you can practice that. You can then go back through your trades once again and practice where you would add on to the trade. And this continual development of challenging yourself is what's going to continue your deliberate practice, hopefully make it a little bit more enjoyable for you as well. and enable you to keep on doing it. And one of the biggest things as well, keep on practicing. I think this is one of the biggest mistakes that traders make, is that once they're successful, once they're applying their strategies and they're making some money out of it, maybe they've gone on a very good run, they'll then stop practicing things. They'll then decide, right, I've done it, I understand trading, I know how to do it, and you'll eventually find out that these things will just dissipate, and then you're stuck because you've not practiced anything new, you've not learned anything new, and you've not challenged yourself. So keep that practice going, and you'll notice that very quickly you'll start to build up more and more ideas, and you'll build further on in your career a lot quicker by doing that. Okay, day 2 basically breaks down as, what do you want from trading, how are you going to get it, and then how are you going to continue improving in trading. So to start off, we looked at career path and goals. Now remember, break these down, split them up into financial, personal and performance related goals, and that's going to give you your 5-year goal. This is your big goal. This is what's going to anchor your trade, and this is going to give you the reason to practice that little bit harder, to read up that little bit more, to create a better process, to create a new strategy. And then you can then break that down into the week by week. What are you going to do this week to achieve at least the beginning of your 5-year goal? And of course, all the time, reassess it. Make this perhaps weekly, make this monthly, make this yearly, but reassess your goals to make sure you are still trying to achieve the right thing. If your goal originally has changed, then trying to achieve something that you no longer want is always going to be that much harder, because you just can't build the motivation to achieve something you don't want. So after that, it's routine. This is how you're actually going to go about doing it, and what this does, it keeps you focused, it manages your time for you, and also it reinforces those good habits, those little things that you go about in your day-to-day routine that just create a little feeling of success, and that breeds. As the success builds from smaller things, then you're setting yourself up in the right way each day. And of course, preparation. Prepare yourself right for every day. This makes everything that little bit easier. It takes all your doubt away. That's the whole point of the routine. It keeps you prepared. It keeps you on track. And then ongoing. This is what's going to make you a properly successful trader, and also continue your development and continue you being able to achieve more and more goals, make those goals bigger. But what it really comes down to, process, process, process. And just follow the 4 areas of the process that I mentioned. Prepare well, execute, evaluate it, and then see where you can improve that process. And in doing that, in how you improve it, this is going to give you a greater understanding of yourself. You'll find out what you enjoy, what you get frustrated with, and these are all going to be little triggers that, again, you can create into a process of how you stop yourself feeling in certain ways, or how you manage that feeling. And of course, process can't be completed without practicing it. Make this practice deliberate, gain some feedback from it, and then challenge yourself again. This will create a new process, and this will keep you moving forward. Of course, it's tough at times, but you've got all the other elements to rest back on, and always you've got that goal that you're going to keep in mind, and that's going to be your reason to continue practicing. So good luck with it, and we'll now have a quick look at the trading development tools.